Good morning, ladies and gentlemen. This is Clueless 8 Frank, and here's a quick 20-minute video cast for pre-market AM report for May 5th, 2016. A couple of quick observations. As all active traders and even non-active investors and traders know, we are undergoing some severe volatility. There is absolutely no denying the fact that despite some very, very accurate intraday technical analysis that has been put in place and tactical precision charts that have benefited members, Clueless 8 members and traders, especially the active ones, it is very, very difficult, if not impossible, to determine overnight action. Saying all that, all I can do is try my best and decipher and relay the message of the markets to my best possible skills, best efforts. If you want to put it that way. The bottom line is these are mathematically high frequency algorithmic driven markets. They are moving between certain trading levels, and even in between those trading levels, they are not moving in a fashion that can be deciphered on a day-to-day basis. There are headwinds along the way. There's no question about it. We have faced a drop in oil. We have faced a rapidly increasing and strengthening of the Japanese yen, which just recently reversed in the past 48 hours. I had shown those on the charts. These are macro global events, including the fear that the referendum in June called Brexit, where Britain, the polls in Britain, the people are going to vote whether or not they want to stay within the European community or leave. It's not that something that's going to happen right away. It's just a referendum, and then it carries on to the next election, and then see what happens. Keep in mind the same stuff happened with the Scottish referendum, and of course it was defeated, and Scotland didn't become another freewheeling nation like a lot of Scots would like. Scots who want favor independence wanted. So the European situation with the EU will most probably turn out the same way, but Britain will definitely, no question about it, will get concessions out of the European community that is going to benefit them more than what they are right now, and not be held hostage to Brussels and the rules and regulations that within the European within the Eurozone. Enough of that. We have random volatility during the day in individual stocks. We have caught a whole bunch of nice movers. And then we have also caught some fantastic earnings too. And we have had a couple of losses. Now keep in mind that earnings are a 50-50 toss-up gamble. And so, you got to play it small. And if it works, great. Take the money and run. Tesla, phenomenal. Up 15, 16 from the lows. Called the shots. Sold a bunch of the common, had small amounts, and that was great. And let's see what those options, open up. So nothing crazy. Okay, let's get into the markets a little bit, because I want to get people listening to this before they start the day. So here we have a chart of the S&P 500 E-minis, one of the most important determinants, as of the external markets and where we trade in. And you can see what's going on here. This is a daily chart. The key fact is, and this is something we don't know yet, is whether or not this consolidation channel, which is still intact in between the Darvas, this is the Darvas box, this magenta lines, and this consolidation channel, the lower end of the channel is around 2017. That translates into 2022 or 2023 on the S&P 500. Which is, again, a powerful reminder. You have to listen to my videocast, end of the week videocast, which were published on Sunday evening. They are extremely accurate, incisive, informative, lays down the game plan as to what might happen, how the game is played. That's the difficulty, because the volatility algos can, confuse the heck out of us. And believe me, I have a tough time too. I called the shots the other day and then did well, got out of the puts, and because the reversal looked fantastic, by the end of the day, the charts were printing some nice patterns, and the next thing you know, the next day the market's down 111 points. We did jump in right away and still made a decent sum of money on the RUT and S&P puts, but if we had held it the day before, it had been 400% instead of 100 to 150% that we managed to get during the day. So that's just the business, you just can't do anything about it. So let's get back to this here. So we have a consolidation pattern here, which is still holding. Lower end of that is S&P 2020, translates into 2017 or 26, about 2018 of the E-minis. You can see that. In fact, it's a little lower than that. So it comes to about 2020. So 2020 is a line on the floor. We break 2020 in the S&P 500. There's going to be some heavy duty selling, in my opinion. No question about it. So in the meantime, this is holding. These are channels that I drew. So you can see that we are in the mid channel retest right now. We came and retested in the pre-market futures, the 2061 level or so on the E-minis. And you can see here that the green candle is still on. Now remember, candle reading is important because it's important to your financial health, as in your trading health. And keep in mind that if this candle turns red, then all bets are off. That means we're going to slip, test the 2037 level on the E-minis, which is the rising 50-day moving average, and then test the lower end of this channel, which is 2033, and this will be dark red. And if it keeps on getting longer, then obviously you're going to hit the bottom end of the range right here at these levels that I showed. So the key is that you can't sit there and think that things are just going to go one way or the other, even in between this sell-off. Okay, if you went short here, for example, all right, you went short here, the next morning you were clobbered, your puts are gone. Then the following morning, on the 3rd, this was Monday, Tuesday, Wednesday, Thursday. Yeah, so Monday you opened up nice. So let's say, you said, okay, that's it. We're going long, because this certainly looked like a nice little reversal pattern. Want to go break out. Didn't work. Failed. All overnight action. That's something I want to remind everyone. A lot of stuff that shows up technically happens overnight. So it's very, very important not to have oversized positions overnight unless you want to bet on it. That's fine. You have a one-sided bet that we're going to go back and test the upper end of the range, 2084, 2090 on the S&P. Then do what you need to do. I'm just telling you that it's very hard to keep overnight positions, long or short, even in a declining market, because the following morning you'll be clobbered. Just the way it is. So now we have 2 red candles here. That's Tuesday and Wednesday. Now we are having this reversal candle building. Let's see what happens, right? Let me expand this a little bit more. So trading is not a kid's game, all right? And I think all of you know that by now. And the ones who think they are, they come into the service, they learn, and then they and then they leave because they can't handle the pressure. And I don't blame them, because it's tough for us as pros to handle the pressure sometimes, even we think we know what's going on. Because the fact is, I do know a lot more than other people what's going on, but it doesn't mean that the machines are going to cooperate with me on an intraday basis or even an intra-week basis. But whichever the case, this is what I'm looking at, and we got to go with the probabilities and not the certainties, because that's the game of trading and investing. So this is something that's exciting. So I showed you the channels. This is what's going on. We can slip, mind you, to the bottom end of the channel, which is 2020 on the S&P 500. So that's still up. That's still there. Just keep that in mind, okay? That possibility and that scenario has not gone away. Now, we have big jobs number tomorrow. They make a big deal about it. In the real world, it really makes no hell of beans difference, because the job growth has been steady. And again, if we get very strong job growth, I think the market's going to first pop and then sell, because that's going to show that the Fed's going to start the bias for the Fed is going to be to raise rates. So markets might not like it. If you get a moderate growth tomorrow on the jobs number, and look at the figures that I'm putting out on the articles on what they're looking for, then that should be a lukewarm situation, perfect for the markets. Okay, and this channel will break out, and we're going to get to that 2085 on the E-minis. That means 2090 or so on the S&P 500. Now here is something which is constructive. Let's just put it this way. All right. And that is what's happening on the internals. The last time we were, and listen to this carefully, please. Listen to this carefully. Last time we were in the depths of the darkness, at the bottom of the abyss at 1800 on the S&P and the E-minis. This is where the stochastics went to. We currently have a consolidation channel which is still intact. A large consolidation channel and then a small one, right? This is channel, this is a small one, and this is the larger consolidation channel, right? Whichever the case, this is a consolidation channel. Look what's going on here. We reached down here below 20 in the 5, 6, 7 range of the RSI, okay, because the stochastics are nothing but a derivative of the RSI, the relative strength index. Look where we are. We have come down on the internals, the guts of the market. We have come down to the same levels we were at when we were at 1800 S&P, except we are at 2050 on the S&P 500. Do you understand what I just said? Now, this could be a powerful statement, and in the years I've been doing this, and since the last 2 years since the service was born, I've been correct quite a few times on these type of readings, and it's been absolutely huge on the upside given where we are right now. I repeat, we are down here at the same oversold levels, deep oversold levels on the market, on the S&P 500, to a point where not only are we starting to curl up, which is positive. That doesn't mean it's just going to keep on going like this. It can just basically kind of bob around these levels. But the fact that we're down here with the S&P at 2050 and not at 1800 is telling us something. In other words, a good portion of the pressure, the intensity of the pressure of this sell-off has created a possible tradable bottom. Short term, a possible tradable bottom. I would like to see S&P 2020, if you ask me, after we pop up a little bit more. But it's not what I want. It's what the market does. Now, keep in mind that there are millions of $9 trillion worth of notional shorts. I don't know what the actual number is now. And the fact is that you have a very large short position out there on the market, which is dangerous to randomly go out for the bears to randomly short every little move in the market, because the short squeeze is what dominated the market in every single time we have had a corrective action. So just to repeat, and I want you to track all of this on your own screen. We are at the same oversold levels here. And this thing has worked beautifully. This thing is the trader's friend. Okay, you know how to read them. You got to know how to be flexible, how you're reading them. But the bottom line is when you get to these levels here, you generally have a powerful tradable rally. Tradable rally. In my opinion, I don't think the market can traverse and go higher than 2100, but that is still a possibility, which is roughly about another 300 plus points from where we are, which we can get in one day, which can get by tomorrow. I don't know. All I know is this is something worth observing. Now, I have 7 minutes here on this thing here, and let me try to show you more charts. So let's take a look at this chart here. All right, this is a more tactical chart of the S&P 500, and bear with me. Okay. Okay. So let's go over this quickly. All right. because these things are what really makes or break a trade, right? You're doing those momentum trades on the Amazons, the Googles and stuff, and all of a sudden they're up $3, $4, $5. You know, you don't take your profits. The next thing you know, bang, it disappears. So you got to follow these, you got to follow the indices, and you also have to follow the futures chart, especially the futures charts during the day should be left open on one screen, or at least popped in and looked at very often in order for you to determine whether or not you're going to stick to that trade or not trade. I report as quickly as possible, but like I said, you got to do the stuff on your own too. So at this point, you can see here that 203 level is a strong support. Okay, right there. This is where we are. I drew the channels. Remember, a chart on itself is just a naked, is a an empty picture. You got to put the structure on it so you can see the picture, so you can see what needs to be done. That's exactly what I do. That's my responsibility to do as a clueless trading trader. So here's the thing. So here are the channels here. You can clearly see here that we're going to have major resistance at the downward sloping 30 moving average. That's again correlates with that 206, 206, 207 level. If for some reason this pattern works out like this, remember these are complicated market structure low patterns. In my opinion, the short term looks like we might have had a basing process. Don't know yet because the markets are so fast, so there's no way I can determine what's going to happen intraday with this particular chart. But I'm giving you the probability of what might happen. So if we break out over this, then the most that we can move up to is the 208 level, because at that point it's the upper end of the Bollinger. It also comes to the, if you call this channel 1, 2, 3, so it's the top of the third channel. All right. So that's one scenario. Now, what's cooperative with that scenario, in my opinion, is what's happening here. We seem to be getting multiple bottoming processes on the especially on this particular drop on the STOs. Now, the STOs here are different than the measurement of the STOs that I showed you on the Thinkorswim. So use both. Okay. Sometimes I see this remain overbought, starting to come down, while the Thinkorswim E-minis are showing me that they're oversold. So I use my better judgment to figure out which one I'm going to follow. So 4 minutes left here. So this is cooperative. Let it go up here, get overbought. And if that happens, we should hit the 20, we should hit the upper, we should hit this zone. In my opinion, if you're a tactical trader, you take profits because those are nice profits. Futures are up right now. Let me see. Futures are up right now 7.25. We got a bunch of Fed speakers coming up. It's going to be all kinds of funky duty stuff that goes on with the reaction in the market. We have to watch oil. The Japanese yen seems to be weakening nicely against the US dollar. So that's a good thing. I've showed that chart. So that needs to continue. Oil dominates the market. And if that goes nutty again, and right now it's up quite a bit. It's up quite a bit. The UWTI right now is up 11.5%. Reasons behind that: the Canadian wildfire, crimping oil sands production, problems in Kuwait, in their oil export area. So this is a big number. $31. $31 on UWTI right now. DWTI was a terrific trade, sold around that the high level, the 102, 104, 105 levels. So that was a fantastic trade for a good 12 plus 13 points. Drip was nice too. Anyway, so looking at this here, what's the bearish scenario? The bearish scenario is that we get up here, we fail. It's going to move fast. We're going to come down straight towards 204, maybe attempt a feeble bounce, and then hit that 203 level. This, in my opinion, is a strong buy point. And of course, if we get down here, which was a big hollow candle reversal, we're looking at 202, which corresponds with the 2020 area. So that's the bearish scenario. The bullish scenario is that we basically break out, maybe vacillate a little bit around here because that's the downtrend line, and then make a sharp move up. There's a gap here to fill. Gap fills work tremendously well. In my opinion, I believe this upper gap will get filled. Hopefully it gets filled by tomorrow or today. Take your profits, reassert what's going on. Do not be overtly bullish or overtly bearish. We are quite deeply oversold on the dailies. Don't forget that. So don't mess around with Mr. Market and go all in on the short side, because then you get you get completely demolished. It's happened to me on one or two trades on the short side, and it's not a good feeling. Thank you for listening. Stick to Clueless A Trading. Bring in new people, and I appreciate every one of your support in keeping the service going. Thank you very much again. See you guys on the trading floor.